Nvidia has sucked all the oxygen out of the room in the artificial intelligence space, but there's one company that is a very key supplier to Nvidia and has talked about raising prices recently, which really could help its financials. Now, there are two pieces of this. One is that if the AI boom continues and Nvidia continues to grow, it will need to source more chips from Taiwan Semiconductor, the company I'm going to highlight today. If Taiwan Semiconductor can raise prices on Nvidia, which it has explicitly said is going to be the target for a lot of these prices, basically saying, hey, if Nvidia is making 75, 80, 85% gross margins, maybe we should get a little bit more of that because we're doing a lot of the work to actually build these chips. But it's not only Nvidia involved here. Qualcomm, Intel, and AMD all make their most advanced chips on TSMC's equipment. So I still think this is one of the better companies to play the artificial intelligence boom right now, because no matter who it is, whether it's built in the cloud from all of those suppliers, whether it's chips that are becoming more advanced from Apple to do more on-device computing, it's going to be TSMC who's going to be doing all the work to build those chips and building those fabrication facilities. So I want to highlight some of the news this week and why this could be bullish for the company long term. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content, and thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's first get to exactly what we know right now. This is from the Nikkei Asia, and you can see that TSMC's new chairman says that he's weighing price increases for Nvidia. One of the things that was interesting they joked about that I think isn't quite a joke is that Jensen Huang, Nvidia's founder and CEO, talked about AI being a $100 trillion opportunity. TSMC is kind of going, hey, why don't we get a little bit of a bigger piece of that if it's that big of an opportunity? He also called him the $3 trillion guy, given that Nvidia now has a market cap of over $3 trillion. But really, it's TSMC's position as the main AI chip supplier to Qualcomm, AMD, and Intel that really gives the company the ability to have a little bit of pricing power in the market. Even when Sam Altman of OpenAI has talked about building several dozen fabrication facilities, TSMC, I think, is kind of going, you know what, it's much more complicated than just writing a check for a few $1 billion and going and building a fabrication facility. TSMC has done a lot of work in that. So what exactly the number is going to look like, we don't exactly know right now. We've seen rumors of increasing chip prices by about 5%, and then packaging prices, which is basically putting all these pieces together, by 20% or so. Both of those things are very much highly value added to a company like Nvidia, which doesn't have its own manufacturing facilities. So those would be the potential moves. And what would it look like on TSMC's financials? Well, if AI demand is as large as expected, you could expect to see revenue growth, something that TSMC has actually not seen recently. You can see from this chart that revenue actually pulled back in 2023, and that continued over the last 12 months, meaning that the first quarter of 2024 was a little bit weaker as well. Margins have also come down from their peak in 2022. That was kind of the heyday of demand for not only mobile chips, but also PC chips as well. So there has been a broader pullback back in the market. And remember that TSMC is not just making chips for a company like Nvidia. They're making chips for Apple. They're making chips for other smartphone manufacturers, for PC manufacturers. All of these fabulous companies that have popped up around the world are largely leveraging TSMC's infrastructure to build their chips. So when demand overall for chips comes down, that means that TSMC's demand and revenue is going to come down as well. But what I think you could expect to see if this scenario plays out is not only growth on the top line, but also growth from a margin perspective. I included a couple of things here in red. You can see TSMC's gross margin that was obviously up throughout the pandemic and then pulled back after 2022. Operating margin, you see a similar trend. We are still significantly higher than we were in the mid 2010s. But the other thing would be to look at their return on invested capital. So with a business like TSMC's that is very capital investment intensive, it's not just about gross margins and operating costs. It's about what are your fixed costs that actually go into building these fabs. If a fab is $10 billion and your earnings that you're going to make from that fab is $2 billion per year, that's a 20% return on investment. Typically, these fabrication facilities can be run for a very long period of time, but demand can kind of ebb and flow when you're not on the leading edge. And so TSMC, I think, is getting to the point where they need to generate a better return on that leading edge, the 3 nanometer process that they're building right now, because those returns have really come down and they're not quite kind of seeing the demand for the second generation products. So products that aren't quite on the leading edge, because some of the companies that would eat up some of that demand, like Nvidia, have now moved to the leading edge. So that's what you're seeing with the drop in return on invested capital down to the 20% range. And so that's the way to think about it, is that TSMC is saying, hey, you know what, we need to make a little bit better returns on our capital. And if you're making a ton of money in Nvidia and everybody else is investing billions and billions of dollars in artificial intelligence development and chips, we want to take a little bit bigger piece of that pie. So I think there is potentially some significant upside for TSMC. Now, the valuation is a bigger question. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. If you look at that decline in return on invested capital and then weigh that against the current valuation for the stock, it's not quite as attractive as you may think, and not nearly as attractive as it was in 2023. You can see that the price to earnings multiple is now around 28.5. When I was looking at this stock in 2023, I did some videos about it back then. The price to earnings multiple was in very low double digits. So 11, 12, that's really gone up as both the earnings side has gone down and the price of the stock has increased. That price to sales multiple has also gone up to 10.5. So that's a pretty hefty multiple for a hardware company that's going to have to invest billions and billions of dollars to keep growing the company. So this is really the balance for TSMC, is how much upside is there going to be from a revenue and a margin perspective as the artificial intelligence boom continues. The thing that I'll highlight is that this is the capital intensive portion of the supply chain, but it's also much more flexible. If a company like Nvidia doesn't have enough demand to fill all of the supply that it can get for, let's say, Blackwell chips a year from now, then they're going to have a glut of inventory. TSMC can just shift around who it's making products for. It seems that it has plenty of demand right now, particularly for those leading edge products. But this is definitely a company you should consider and not overlook in the artificial intelligence space, because it is the actual fabrication facility that all of these leading companies rely on to make its products. Seems like it's probably going to be flexing those muscles, at least while it has the current market position that it has, until a company like Intel catches up or Samsung catches up and becomes a real viable source or second source of supply for a lot of these companies. So don't underestimate TSMC's ability to grow both the top and bottom line over the next couple of years as they push that pricing power. But what do you think about TSMC stock? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.